All right, welcome to Talkin Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about 6 stocks that have one thing in common. They are all down drastically today. They all hit their 52-week low, and unfortunately, they're all related to the Hong Kong exchange. So I want to go through what's going on there. We really don't talk politics on this channel, so I'm not going to get into the political side of this. We do have to acknowledge the investment side of this, and this is having a fairly dramatic impact on a group of assets. So I want to go through what happened. I want to talk specifically about the 6 that I'm looking at in particular and see what's going on with them today and where we might be going in the future with this. Okay, so I'm going to start with this article from MarketWatch. Hong Kong stocks suffer worst single-day rout since 2008 as Xi consolidates power. And then you'll see a little note down here. U.S.-listed China ETFs see double-digit losses. Well, it gets even worse than that. Hong Kong stocks suffered their worst single session since the 2008 financial crisis after Chinese leader Xi Jinping tightened his grip on power. So I really don't want to talk about the politics of this. I don't think anything surprising happened here, but it was an event, and clearly the market is reacting massively to it. So the question is this just a short-term knee-jerk reaction, or do we have a fundamental shift in these American depository shares that trade on these Chinese companies? And I will identify the 6 companies that I'm talking about in specific that I think are the most impacted by this. The Hang Seng down 6.36 ended more than 6% lower to a new 13-year low. Okay, so our markets are struggling. They are at a 13-year low. That is a catastrophe. With tech giants including JD.com, Baidu, Tencent, and Alibaba dropping between 11 and 13% each. So we're going to look at what those stocks are doing over here in the United States. The next sentence says, American depository receipts of Chinese companies also tumbled, as did key China-themed ETFs. So we're going to look at those American depository receipts. So for those of you who don't know, when you're trading a company that is not based in the United States, what you're really trading is an American depository receipt, or what's more commonly referred to as an American depository share, an ADS. So we are going to take a look at those because that's what I'm really here to talk about. Okay, so a brief overview of what happened, and then just a little note on what Goldman Sachs has to say about it. Over the weekend, the 69-year-old Xi secured his 3rd term as a general secretary of the Chinese Communist Party. 4 of the 7 standing committee members were replaced. All of them are at least 60 years old. So analysts at Goldman Sachs say most of the new appointees working with Xi are earlier stages of their careers. We note that the incoming leaders could arguably be more focused on ideological and political subjects, while the retiring policymakers appear more economy/market oriented, they said. So you can see what Goldman Sachs is worried about. We've got some new people around Xi, we've got some new people in leadership, and the concern is they are less known to us, so the fear is they will be more ideological and political, whereas the people who were already in place, we know we were working with them on an economy and market oriented things. So we were in a certain position, and now we're forced to deal with new people. This is the same old story. This is uncertainty bringing its way into the market, and the market despises uncertainty. So you're seeing a collapse of these stocks today. Now, it seems like they've bounced off of their low. Each one of the ones I'm going to look at has hit their 52-week low today. They all seem to be recovering a little bit. So what I'm hoping is this is a knee-jerk reaction, and over the days and weeks, it may take days, weeks, or months to get to the bottom of this, but hopefully we'll return to a more business as usual situation over the course of time. But in the meantime, these stocks are getting totally decimated. So let me go to the list of stocks and show you what's happening. We're still pretty early in the trading day today. Okay, so here is the list, and it's actually 7 stocks that I'm focusing on. So you're going to see if we go down this list, Alibaba's down 15%, Baidu's down 14.5%, Tencent's down 14.5%, JD is down 15.5%, NIO's down almost 20%, Lee is down 20%, and XPEV is down 15%. So these are monumental move to the downside. All of these stocks have hit their 52-week low today. I just want to look at the charts and show you what's happening because I think we're seeing a little bit of stabilizing, but these are still dramatic downturns off of stocks that were mostly pretty near their 52-week low even before this happened. Okay, so this is Alibaba. You can see it was down 20%. Now it's down about 15%. This is going to mirror the theme of the day on these stocks. stocks. Alibaba's now down to $163 billion market cap. They were multiples bigger than this. Even in the last 52 weeks, they were at $178. They're now at $61. So they did get down to $58 earlier today. So you can see a little bounce off the bottom, but still down almost 15%. Okay, Baidu is pretty much the exact same picture. It peaked at down about 19.5%, and now it's pulled back to about down 13.5%. So there is some rebound, and you can see the good news is we're seeing a lot of 15-minute green candles in a row. So we're all the way back to where we gapped on the open. We did go down from there. So we'll see how the rest of the day plays out. And obviously, it's going to take days and days, if not longer, to figure out what's really going on with these companies. But when I see gigantic moves across the board like this on really just uncertainty, there's no new information here at all, I tend to think there's the potential for a buying opportunity on this. But obviously, you've got to be very careful. These stocks were already at their 52-week lows. They've taken a dramatic downturn on the day today. So super volatile stocks. And again, there is that uncertainty around them. So we just don't know. So these are stocks I have on my watch list. I don't own any of these stocks presently, but I do follow these closely because at some point I feel like these potentially could be an opportunity. But again, this is not financial advice. Please be super careful if you are currently invested or if you are looking to invest in any of these stocks. Tencent, okay, so I just switched over to the Tencent chart. You can hardly tell I'm even changing charts because they're all basically the same. Tencent from yesterday's close to the low today was about 17%. It's now down about 14.5%, so a little bit off of its lows. JD was down as much as 21% today, so it's currently pulled back to down 14.5%, so this is nice to see a little rally here. But again, we're still down almost 15% on the day. These stocks are having epically bad days. The only consolation I'm taking is that they did tend to bottom out very early in the market opening, and they have rallied since then. So we'll see what happens at the end of the day today. Xpeng, or stock ticker XPEV, it was down almost 23% this morning. So this is a little more encouraging. It's now down 13%, so it is way off of its low. So we'll see where it goes from here. From a retail standpoint, the most popular of these stocks by far is NIO. They actually were down 25% this morning. And like I said, all these stocks were already hovering around their 52-week lows prior to this. So they were down another 25% on top of that. They're now down about 17.5%. So again, a little bit of a recovery off the bottom, but these stocks took a big hit this morning. And for NIO, Lee, and Xpeng, they're really getting hit from all angles. So this was a very tough day. Okay, so the last one is Lee. We might as well just take a look at all of them. And this is actually the most dramatic of them all. This was down almost 30% off of yesterday. And that was just about 1 hour into the market open today. So you can see we've rallied from there. So from down over 29%, Lee is now down 19%. So still down drastically, but off of those lows of the day. So we can only hope we see some more green throughout the day. Again, this did send a shockwave, but I do feel like it's a knee-jerk reaction. However, this is not financial advice. It's way too soon to tell how this is going to impact these companies. Obviously, this is having a major impact in the short term on these companies. We'll see what happens in the long term, but I wanted to put this on everybody's radar. These are drastic moves, and these are fairly high market cap companies. So I thought it was worth talking about. So again, please be careful, do your own due diligence, and be careful investing in these stocks. Thanks so much for watching. Remember, if you made it this far, please remember to subscribe to the channel and hit the notification bell and smash the like button. So thanks again for watching, and we will see you in the next video.